Hello and welcome, I'm Suyash Maheshwari and you are watching Last Stick here on News9, where we break down the day's action on Dalal Street. And Indian markets witness another round of profit taking in a highly volatile session as investors position themselves ahead of the interim budget on Thursday and US Fed's policy decision which comes out tomorrow. Also, earning disappointments from Bajaj twins, Bajaj Finance and Bajaj Finserv, as well as ITC further roiled the entire market sentiment. At close, Nifty was down about 1% or 216 points to end at 21,522 mark. The index now opened in the green and had managed to even rescale the 21,800 levels in the morning trade itself, but soon bears took the control of the session and the market traded lower from there on. However, the selling pressure overall amplified in the afternoon trade and the index broke below several interim supports to end deep in the red today. I think the only saving grace and perhaps making a case for bulls also to take market higher from here is that the Nifty was able to respect its 9-day moving average, which is placed somewhere on the 21,500 mark. This also coincides with the 38.2 retracement level from the record high of 22,124 to the recent low of 21,137, and we also ended above that 21,500 mark. So perhaps that becomes a first crucial support for the index going forward. Sensex, on the other hand, ended with a cut of about 800 points or 1% or over 1% to end marginally above the 71,100 mark. Now, the broader markets ended mixed today. The mid cap 100 index was settled about 0.4% lower, and it ended a touch below the 47,800 levels. And the close was also very close to the day's low. So pretty much the day's low was somewhere around the 47,730 mark. So we just ended about 60 points off the day's low on the mid cap index. The small cap index, however, managed to end in the green. And remember, in the morning we had put it out there that the index had scaled a record high level. In fact, the index has also managed to end at a new closing high of 15,673, up 0.23%. India VIX also closed about 3.5% higher, above 16 levels. Now, this is the highest closing for India VIX since mid-March of 2023. But then again, you would expect the volatility to remain elevated since it's a data-heavy week. We have the interim budget on Thursday, the Fed's policy decision which comes out tomorrow, and the earnings season which is going on, and we have a lot of major companies that are going to report the earnings this season. We began with ITC and Bajaj Finance. Today we have L&T, which should come out with its results anytime now, and SBI and Maruti Suzuki are also lined up for the week, to name some of the other companies. Adani Enterprises and Adani Ports as well. And even if you look at the volatility to understand how choppy the markets are, just look back at the last few sessions. We have seen moves of about 1% or so in the last 4 of the 5 trading sessions. Nifty managed to end in the green in 2 of those sessions and ended in red in 2 of those sessions. Let's also look at some of the sectors and how they performed in today's trade. Nifty Bank could not sustain to the bullish momentum that it had built on yesterday. We saw some bit of a profit taking in your headlining counters like HDFC Bank, and that index ended about 0.16% lower. The IT pack also came under pressure. The Nifty IT pack ended with losses of about 0.4%. FMCG was a major drag on the market today. The index ended about 1% lower, whereas your sectors such as metals, PSU banks, realty and media stocks, now they outperformed. The metal pack was up about 0.26%. The PSU banking sector saw a good bit of a rebound, led by stocks such as Punjab National Bank, which rallied about 3% today, and they have been rallying since the last few sessions, ever since the fundraising plan was announced. Apart from that, realty pack also saw a bit of a resurgence. Remember, we had seen some bit of a profit taking take place at higher levels, but then again the index is at a multi-decade high, so some bit of a choppiness at a time when the market overall is feeling heat at higher levels is expected. The media pack also saw some bit of a bounce back, after this was led by actually Zee Entertainment, which saw a good bit of price action. The last I checked, the stock was up somewhere around 6% or so, and it was on the back of NCLT, agreeing to hear the Zee's shareholder plea, on March 12th. But with that, let's also bring on board Mr. Amit Kumar Gupta, founder at FinTech Capital. Thank you for joining us here on News9, Amit. Always a pleasure speaking to you. What are you making of this choppiness in the market? 1% move pretty much on a daily basis since the last week. Yesterday, after that almost 2% up move, the market, at least the sentiment that we were getting from the analysts was that the pain, at least for now, is over. But then again, we lost about 1% again today. What's going on here?
Yeah, hi Suyash, thank you for having me. So I think the markets are nervous in general. So what we are seeing is there is, if a positive trigger comes, then we see the markets moving up. If there is a little bit of a negative trigger of the markets have moved up a little too high, then we see a lot of bout of profit taking which is happening in the markets. The markets haven't really gone anywhere in the last couple of weeks. Broadly, they have traded sort of 2300, 700 kind of a range. And I think market is waiting for the triggers to happen. There is an FOMC meeting starting, today. Result will be out tomorrow. Then you have the budget on first. Then it's also a very heavy earnings season. So what we are seeing actually is that market reacting to rather stock specific kind of action rather than taking a call on the broader indices. But at the same time, the volatility is increasing. It could be due to the budget and due to the other events which are lined up. But what we are seeing in general is that there is a very strong indication of profit taking in a lot of counters and sort of a distribution happening in a lot of small and mid cap counters as well.
All right, and there are also reports of foreign fund managers opposing this SEBI's instant settlement plan. And for the benefit of our viewers, let me just explain what the instant settlement plan is. Now, SEBI is planning to make changes on how the stock market transactions are settled in 2 steps. In the first step, they will offer an option of T+0 settlement, which means that traders will get their money by 4:30 p.m. on the same day as they make a trade. This is to help market institutions adjust to a shorter settlement cycle. After this, in phase 2 or the second step, they plan to move to an instant settlement cycle where traders will receive their money right after making a trade within an hour or so. So once this second step or the second phase is implemented, that optional T+0 settlement will no longer be available. Now, SEBI is currently gathering feedback from the market on these changes. It is expected that the first step will start from somewhere this year, and the second step will likely be implemented in 2025. Now, in a letter to the market regulator, leading fund managers have said that they fear the planned move may create fragmentation of market volumes and distort prices due to 2 settlement cycles. Amit, coming back to you, what's your stance on this? Is instant settlement a boon or a bane for the markets?
No, I think it's a very positive step, and the instant settlement, whenever it comes, whenever the market participants are comfortable, whenever SEBI is comfortable in actually implementing this, it will be a big booster, and we'll be the first country to actually implement this instant settlement. It hasn't been done anywhere else. But my sense is that volumes may actually improve, as compared to some reports that volumes may drag. The reason for that is if you're getting the instant settlement, there is always an urge to trade more, on the same day. So earlier you have to wait for the funds to come. Even now, if you sell any of your holdings, then only 80% you get, 20% you get actually the next day. But if you are getting the instant settlement, then volume should actually improve. And there are a lot of counters, even in the Nifty 100, where the volumes are not that great. So, in a lot of F1 counters, it could help if there is an instant settlement and liquidity is actually going to improve in that.
All right, and one of the top stories on the D Street is a Zee-Sony saga that's going on, and the latest in that is that NCLT has agreed to hear Zee's shareholders' plea on the Sony merger, for which the hearing will be held on March 12th. There are also reports that an emergency arbitration will be held in the Singapore court tomorrow. Now, Amit, my question to you is, what are you making of this entire, the saga that is going, and what do you think is the end game here? Can Zee perhaps strong arm Sony into going through with this merger?
So I have a different view on this. I think the end game has already happened. What is being called whatever is happening now is just a dragon kind of a process. The NCLT hearing, I'm not sure you can actually force a company to actually merge if they don't want to merge. Even if there is an NCLT hearing, we cannot force Sony to actually merge. Secondly, the hearing in Singapore, which is due tomorrow, because of which probably the stock was up today, that is again immaterial. That is just for the sake of regulatory purposes. It is happening. There is nothing going to come out of it as of with respect to the merger process. So I don't think this is going to happen. There are reports that they will be doing fundraise, etc., which again is a very gray area because SEBI has already put a ban on the management of this company, couple of management professionals, and I don't know how the comments are being made without giving any notification to the exchanges that they will be doing this fundraise. Uh, and how they are going to get the money, that is a completely different question. Because all of the shares in the supporting company, whether it is City TV or whether it is Learn or whether it is Dish TV, all the shares are pledged. They themselves have only 4% shareholding in the company. So how they are going to do the fundraise, I'm not quite sure about it. Uh, from a tracking perspective, we might read the headlines, but I don't think anything is happening in this for the next 6 months.
So, I mean, considering that the promoters only have a 4% shareholding in the company, do you think that there is a possibility of a hostile takeover either by Zee or any other entity?
The hostile takeover may happen, but not in the near term. I don't think without all these the legal hassles, anybody would even think of doing a hostile takeover. It can happen, but only once these legal issues are, issues are sort of I'll reach a conclusion. I mean, currently Zee is talking about suing Sony. Sony is asking for a termination fees with all these overheads. I don't think anybody would even touch the company at this point of time, even if they're planning to have a hostile takeover. Moreover, shareholders also plan to call a EGM because they are the institutional shareholders, are the majority shareholders in this company. They are also planning to, call up a EGM and throw out the remaining 4% shareholding of the management as well. So we have to see, wait and watch how that unfolds in February, March as well. So I think eventually a hostile takeover can happen. Even a takeover can happen, but I think we are still 6 months away from that.
All right, and another stock making the rounds is Tata Motors. Now, Tata Motors has surpassed Maruti Suzuki to become the most valuable auto company. And if you look at the stock, it's up over 90% in the last 1 year versus about a 13% rally in Maruti. Now, even Maruti recently had put out some comments from Mr. R.C. Bhargava that it will first export its electric cars to Japan and Europe before launching them in India. Do you think Maruti is missing the point here?
Well, there have been a lot of reluctance from the Maruti side, as far as the EV portion is concerned. I think that cannot be really explained by going by the management commentary what we have seen. But that's an opportunity for other players like Mahindra and the Tatas to push their EV brands. In fact, Tata Motors, which is doing very well, is now coming up with these punch EVs, and 4 or 5 options are there. Battery pack options are multiple in that. So my sense is that if a company decides not to venture out too much into EV and stick to their core competencies of petrol and diesel cars, then there will be some other company who will take over the metal and try and create a position of them. Because let's face it, hybrid and EVs are the future. In 10 years, we are going to have much more number of cars in these segments rather than currently. The early adopters, as far as the OEMs are concerned, the auto OEMs are concerned, which are mainly using electric cars, they would benefit in terms of market shares and profitability as well.
Right, that's a view coming in from Mr. Amit Gupta. Sir, thank you for joining us here on News9. Always great insights from you. But with that, it's a wrap on this edition of Last Tick. Keep watching News9 as we'll be right back with Business Plus on the other side.
तो जब हम करेंगे तो पता लग ही जाएगा. सलमान खान का करेंगे, मारेंगे या जोधपुर में मारेंगे तो पता लग जाएगा.
This is someone who is sitting inside our jails and is still very obviously and openly running and possibly the largest organized criminal operation in the country.